2 minutes on the 5. I'm already up like 300 something right now.
Ooh.
Securing though.
Just in case.
Yeah. Secure this top wick. Secure 380. Bucket go from there. I secure my stop. Secure up here. Secure another 500 right quick.
That shit's a banger.
What is going on, guys? So this is just a quick rundown on a top-down analysis for US 30. I posted up a picture a few days ago in regards to a markup. And a lot of people were like, oh, that's so many indicators. And they just really didn't understand my markups, right? And as a trader, that's okay. You should be the own Picasso of your creation, right? So what I mean by that is everyone shouldn't have to understand your charts. As long as it works for you and you're profitable and you're making money, who cares who it makes sense to or not? I know profitable traders who are swing traders, day traders, and scalpers, right? Or intraday for my day traders, right? So the way you want to think about it is just being the Picasso of your own art. As long as you understand it and it makes sense to you, it's all good. But just wanted to make a little quick video just kind of showing the markups from scratch so then it can make more sense, especially for my followers on Instagram, right? So what I like to do first is pretty much look at the daily. I look at the weekly occasionally, like when we're hitting, new months, new weeks, so on and so forth. But Mondays through maybe Monday through Fridays, I'll do a top-down analysis from the daily all the way down. And then usually like on a Sunday, I'll look at the weekly and the monthly, right? Just to kind of see where we're at, right? So touching on the daily time frame, first thing that I got off of there was that we had a slight uptrend, right? We had a slight uptrend. The next thing I want to mark off, and I like to use horizontal lines, and that's probably where my mistake, or not, I wouldn't say mistake, that's where a lot of people get lost, because when you put horizontal lines or horizontal rays, it goes across the entire chart. And I had markups from way back in like fucking 2020, 2021, right? So I had markups from all the way back there. I tried not to delete my markups so that way I can kind of see the progression, right? So I had a horizontal ray at the all-time highs, right? So I mark off my all-time highs at the very top right here, which you can see. Use a horizontal ray just to kind of let me know that, hey, this is the all-time high. Then I like to kind of just put a little text behind it so I know what that line is for once I move into lower time frames, right? So pretty much just all-time high. Very, very simple. I like to keep it to the right of the chart, top or bottom, doesn't really matter. And then okay. So we have marked off our all-time highs on the daily, so we knew where market is rejected and obviously the all-time highs. All-time highs are usually uncharted territory. What I like to recommend, especially to the community, is kind of secure your profits, right? You never know where it's going to end. You never know where it's going to start dropping. So you just kind of want to be, vigilant of what's going on. So we had an uptrend. We marked off our all-time highs. And then if you notice quickly for my real traders, we got a slight uptrend channel, as you can see here. Higher high, higher low, higher highs, higher lows, higher high, higher low, higher high, and then it creates a new lower low. So what we like to do is mark off these lower lows, right? And you can essentially grab it from wherever you want. What I like to personally do is grab it where I can get the most candlesticks, right? Where I get the most rejection, either at support at the bottom or at resistance at the top. If it plays on both sides, even better. Kind of gives me that, key level instinct or whatever the case is, right? We get some action around this area, right? So from here, we got a drop right here. So what I like to do is maybe grab as many candles as I can, and boom, I'll put it right here. And of course, I can go down the line and go through these all-time highs, all-time low, whatever the case is. I can go through the markups. Next one I would put is maybe around right here, right? So you start to see a bunch of lines. Now imagine this on fucking charts from 2020, 2021. You're gonna see a bunch of lines everywhere, and it does look like indicators, right? But just to kind of let you guys know, the only indicator I have on the charts are the 50 MA moving average, and then either more than likely it's going to be an RSI, You can see right there, RSI, right? I'm more of a momentum trader. For those of you who know, I scalp, right? So moving on to the charts, we got the higher highs, higher lows, higher highs, higher lows. Then we get a break of structure. As you know from break of structure, well, from me personally, how I learned it, you don't essentially enter at the break of structure if you're a conservative trader, right? If you're a more aggressive trader, aggressive traders usually trade at the break. Me personally, it just kind of depends how I'm feeling. Sometimes I'll be aggressive, but you got to understand the risk with that. And sometimes you get conservative and you understand the risk with those, right? Sometimes you're waiting for that retest as a conservative trader and it just doesn't happen, right? And then sometimes you get that break of structure and then you're jumping on the break and sometimes it retraces. So it's pros and cons to both. You got to choose what best works for you. So as you can see here, we got an uptrend channel, higher highs, higher lows, then we got a break of structure. And then not only do we get a retest, we got a retest at the all-time high. So if you were really aggressive there, you start to see some consolidation. The way I look at consolidation is kind of like momentum slowdown, right? The momentum is starting to slow down, whether, you know, going up or down. So not only is it consolidating, you start to see it consolidate right here. Then we get that break of structure candle. We get that retest, as you can see, the consolidation with all the candles. And then boom, we get the drops, right? Doesn't happen like this all the time. It also depends what your goal is in terms of how many pips you're trying to collect, how much money you're trying to make per day, right? Best advice for you there, get something that's more realistic, right? Don't try to just, people want the chart to do what they want it to do instead of doing what the chart is giving you. And that's the problem with trading half the time, right? You're trying to collect 140,000 pips or 500 pips in a day. Every day is not going to give you 500 pips. Some days you might get 100 up, 100 down, 100 up, consolidate. So you got to be realistic with what you're looking to collect. So we got an uptrend, so on and so forth, and then a break of structure. So we got a break of structure right here, retest, break of structure. We start to retest these highs over here. As you can see, this high would probably be a liquidity grab from over here. Right, and then you can do small things as I get into the lower time frame, right? So this is how my daily would look, right? And again, on Instagram, you probably saw a bunch of lines. Those lines were from, like, again, 2020, 2021. I just wanted to see the progression. Obviously, I had them different color coordinated, so that way I know the year in which I put those lines, so I know whether to accept it or not. And then probably do a little back testing to see if that area is still relevant in today's market, right? So then I go ahead and I move over into the 4-hour time frame. Now the 4-hour time frame, obviously you get a little bit more candles. And this is where you start to see the action, right? So from here, what I like to do is maybe grab some rectangles, so on and so forth. You can see right here. Don't want to do too much, but just to kind of show you what's going on, right? Then you get somewhat of a downtrend coming over here, so on and so forth, right? You get a little bit of a downtrend. You did have a slight break, but then it breaks right back into that downtrend. So this is where, you know, again, like I said, this is where you can get faked out a lot. A lot of people who break, they're looking for that structure, or, you know, if they're waiting for the retest, it's very easy to get caught in these. Best thing to do there, candlestick analysis, wait for, you know, at least 3 to 4 confirmations to get with your confluence to then go from there. So obviously we got a little bit of a downtrend channel starting over here. Well, kinda, it's a little sloppy, but it is there, right? If you wanted to go ahead and fix it and even lower it, right? So put it this way, you can do that as well, right? We got lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then we start to see a break, right? All of this coming down, that would be news from Trump, right? If you don't know, tariffs have been the biggest thing of this year so far since Trump has took presidency. I do believe he speaks today as well around 4 p.m. I'll double check that for you guys. But overall, all this downtrend or, you know, downwards momentum came from tariff, 20%, 25% on steel and cars and so on and so forth, energy being cut off in New York, whatever the case is, right? Clearly that's all negative, and it does match up with the technical analysis. Now, we did get a little bit of a break of structure. Excuse me. We did get a little bit of a break of structure on the lower time frames. Obviously, the 4-hour, you start to see that higher high get created. Then it kind of bounces into that lower low. What I'd like to see, because it broke back into our lower lows or whatever the case is, and it then created a new lower high, which is equally lower high over here. We want to see how the market reacts around this area, which is the 41,963 area, which is this horizontal line right here, right? So now moving forward, what I like to do is pretty much kind of just get that gap right here. So if you guys don't see, there's a huge gap right here. Gaps do eventually close. You just never really know when, right? So what I like to do is kind of just mark off the gap. So we got a gap from here to down here, kind of get the wicks of those body candles. Don't get the entire body of the candle, because then that becomes fair value gap instead of just a regular gap, right? And that's a lesson for a whole different day. Look up videos on fair value gaps. So right here we got a market opening gap. Obviously it did end up closing it, and it's right near our area of interest where we have that 41,963 line right there. You start to see that rejection along these lines could potentially mean, you know, going towards the downside. Now from here you move into the 1 hour time frame, you start to see more candles, kind of more solid candles, right? If you go into the higher time frames, you start to see wicks, which is really good. This trade will essentially look kind of like this. If I were in short positions, more than likely I would enter here once I get a confirmation candle on the lower time frames. I like to use either 100 pips or less depending on my setup. So right here, the risk would be up here. I put it a little bit higher just in case, so about 224 pips in terms of risk. And then I'd go to the next wicks. I'm not looking to catch all of this right here, right? Just being honest, it's very unrealistic that that'll happen in one day. And as you know, I'm a scalper, right? So I like to put it at the very next low areas, which is support, resistance, whatever the case is, right? So if I can just grab this support over here, right? This is support, this is a market gap. I'm not going to go ahead and color coordinate it just for the sake of the video not being super long, right? So this would be the area of interest that I'll be looking to get into this trade. If I were in this trade already, I'd be up about 155 to 150 pips overall. If you guys know me, 50 to 100 pips a day keeps the bills away, right? That's how I like to trade. And it's more realistic, right? Catch 50 pips is more of like a normal day. 100 pips and more, so it's been a great day. It's been an amazing day. 100 pips, 15 lot, you're looking at about 1,500 in a day. You can literally stop trading for the rest of the week if you wanted to. Obviously, we don't trade for bare minimums over here, right? So this would kind of be like the setup that I'd be looking for, just to kind of give you an eye on what I'm looking at. Now, when I'm going into the 1 hour time frames now, obviously I can start marking it down just a little bit. I would see that these areas have been rejected, and then I'll try to get the risk as low as possible. So if I can get anywhere from 100, so on and so forth. Obviously, this is at a trader's discretion, whatever you feel comfortable with. At this point for me, if I'm risking 215 pips, more than likely my lot size or risk or contract size is going to be a little bit lower because I'm risking more than I'm comfortable with. I like to risk anywhere from 100 pips on stop loss, and that's about it. If I lose 100 pips in a day, it is what it is. I'll probably try to break it down into 2 trades, just depending on how the day goes, right? So as you can see here, we got that market gap open, and then we can kind of start marking off our highs, so on and so forth. So this is at the 1 hour time frame. At the 1 hour time frame, we're looking for a little bit of structure, and then we're looking to see how the candlesticks are forming, right? So if the candlesticks are forming pretty good, then this is like, you know, confirmation candles, like either a huge engulfing candle followed by a quick retracement, you know, grabbing some quick liquidity and then going on from there. So you can see here we got lower lows, lower highs, lower lows, low. Then we got lower lows, then we got new lower highs. So from here, yes, it did break towards the high side. This would have been last week, or even on Monday, I believe. This would have been like Monday, because Monday the market was just shooting to all-time high. Well, not all-time highs, but the market was shooting in the upwards motion. Barely any news. Also Monday, start of NFP week. So really tough week overall for my new traders. NFP week. The market can be a little choppy, a little unpredictable. So you got to lower your risk if you still do want to trade. Right, so this is just, again, a quick little breakdown. Nothing super crazy. I'm very simple. Price action, support resistance, some trend lines, maybe an RSI every once in a while looking for momentum, so on and so forth, right? And then usually when I get into the 15-minute to the 5-minute time frame, that's when I'm looking for my entry, right? So if I was looking for my entry on this particular trade, remember what I said about market slowdown. So on the higher time frames, we got lower lows, lower highs. This would be considered the lower high. So this area all right here, obviously for video's sake and length, I'm not gonna go too in depth. If you do want to go more in depth, go ahead and make sure you check out the community. It will be in the link in the description below this video. But very, very smooth overall, right? So this would be considered our lower high area on higher time frames, as to why you guys seen all these bunch of lines. Again, they're markups from fucking 2020, 2021. Now, we got the lower high. So we know that on higher time frames, this is the lower high. Then we get, you know, some reaction. If you wanted to, if you really caught a good trade, you could have caught this trade from up here, right? The risk is little to nothing, literally. Let me see here. This trade would have been a 75 pip risk if you got in with, you know, waiting for those candlestick confirmations. You'd have been good, man. So for examples, like what I mean by it, you know, we got some right here. Then we got a huge push on towards the downside. We got a little bit of consolidation right here. You could have got in right there, right? You could have got in right here for an entry once you've seen the momentum slow down and collected all of this right here. Not only that, then on this side over here, you do have some momentum slow down as well, which is pretty much that consolidation area. We're already in a downtrend. The trend is your friend, right? We try not to complicate things too much. And I know I'm going to get the trolls in the comments. Oh, that's not how you trade, this, that, and the third. At the end of the day, guys, if you're fucking profitable, who gives a fuck, right? I know so many traders who know everything about trading but withdrawals, right? At the end of the day, why the fuck are we trading? Are we trading to be right, or are we trading to make money? That's all it comes down to at the end of the day. Right? There's more than one way to score basketball. You can get an assist. You can get a three-point shot. You can get a mid-range. You can get a layup. You can get a dunk. You can get, you know, foul for the free throws. There's so many ways to score on a basketball court, but people only think there's only one way to make money on the charts. I get it. There's a lot of biases with, you know, smart money concepts, ICT, you know, price action, or whatever the case is, right? There's so many ways. Me personally, if you're making money, I do not give a shit, right? Make your money, enjoy your fucking life, get those withdrawals. So I know I'm going to get those trolls in the comments. It is what it is. Me personally, I'm more candlestick analysis. I like to go for a certain amount of pips and be done for the day. My trading day really consists of maybe 1 hour to an hour and a half of marking up and market analysis. Doing the markups on the charts, checking my fundamentals, Forex Factory, SNBC, CNBC, you know, Bloomberg, so on and so forth, to make sure that the news matches up with the technicals. If not, I kind of just wait. That's one of my confirmations or confluences, and that's what I look for, right? So in this particular instance, on the 15-minute and the 5-minute, I'm looking for more of a candlestick confirmation. So if I start to see momentum slow down, right, it was at, you know, pushing towards the high side and starting to reach these levels, as you can see over here, where it's just strictly consolidation. And if we wanted to, we can grab this high of the wick to the body of the candle, and this right here would be kind of like our resistance area, because if you go into the higher time frames, like the 30-minute, that'll all be kind of just wicks, right? So this is why time frame top-down analysis matters, right? So on higher time frames, all of that shit is just wicks. So you got to understand that when you're moving into the lower time frames, when you see little candles like this happening, right? So this would obviously be my resistance. I start to see momentum slow down. If I wanted to be, you know, stingy on how much I risk per this trade, I could have went down here and either took these highs up here or the other previous highs right here, making this trade fucking worth it. 33 pip risk for over 229 pip gain. Obviously, I'm not looking for that. I'll be looking anywhere from here to over here, more than likely around here. I try not to get the end of the wicks. I try to get as many candles to touch a support or resistance for my TP areas, right? So I got a lot of candles touching right here. I'll maybe grab the bottom of this wick right here, and that'll be my TP. So I'm risking 33 pips for a chance at 335, right? More than likely, Once I get this candlestick analysis, get these nice pushes towards the downside, I'm pretty much done for the day. I'd probably stop around this area right here, and I'll just grab this to, for markup sake or time sake of the video. If it's currently moving, I'd grab the previous support resistance. So this would be the mini resistance area right here. We start to see a lot of momentum slowdown. This is where you make a decision as a trader. Am I putting it at break even, or so that way it becomes a risk-free trade, or am I just going to take my profits and get out for the day? At this point right here, that's about, from entry to this area of consolidation is about 100 pips. And that happened in about 2 candles or so, 1 candle really, right? And then this is another thing to point out. This is why I say candlestick analysis is very important. Let me go ahead and grab this arrow real quick. So as you can see right here, we got 3 candles forming. I believe that's an evening star at resistance level. So more than likely on this particular, I didn't take this trade, but just to let you know my thoughts while I'm trading. This would have more than likely been my entry right here, right? Little to no risk. Would have probably been 0 drawdown. It doesn't happen all the time, but just kind of how I look at the markets. We had an evening star at resistance level, enter on the previous candle, huge candle towards the downside. I know it's really easy to mark up a chart when things already happen. To catch it live, I do trade live with my community every single day. I don't want to say every single day. I trade with them about 3 times a day. I take 2 days for myself, mental health wise, and just kind of just trade for myself, right? I don't want to trade for everyone all the time. So Tuesday, Wednesday, Thursdays, I trade with the community. Mondays, I trade by myself. And depending on how the week is, Fridays are usually optional, right? So Fridays, if I made my, target for the day, then it is what it is. I'm not trading on Fridays. I make it a withdrawal day, right? Because at the end of the day, that's what it's about, withdrawals. It's not about who's right, who's wrong, or your style of trading. It comes down to making fucking money and making those withdrawals happen. So with that being said, this is just a quick breakdown. And obviously now once we go into the higher time frames, it looks fucking insane, right? It looks insane. Now imagine that on all of this in the previous or past tense, right? Being marked up like that. And that's where I got, why do you use so many indicators? They're not indicators. It's literally just one indicator, 2 indicators, 50 EMA and the RSI, but I only take out the RSI once it's crunch time. It's time to actually trade, right? So chart looks like that. Looks a little crazy to most. Again, if you're making fucking money, who cares? Appreciate you guys for watching this quick little breakdown. And, we'll see you guys on the next one where I will be, reviewing Top Step. I did go ahead and take care of Top Step. Pretty good overall. We'll get into that video on the next one. Appreciate you guys. Don't forget to hit the like and subscribe button. We are on the road to 15,000 subscribers. All right, let's go ahead and get this video to about 500 likes. Again, one more time, 500 likes. And then we'll do a free giveaway, whether that's, entering the community, a few people into the community for a month for free, or giving away some challenges. I got a few prop firms that I work with, and we'll go from there. Appreciate you guys again, and I'll see you on the next one.